Whether you're a scalper or a day trader, whether you trade the London session or the US session, I got you in today's video. Let's get to it.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid. Oh yeah, trading get paid.
What's going on, guys? Joe Genta here, and it's time to trade and get paid. So we're looking at GBP, JPY, and we're looking at the 1 hour chart, and that's where we're going to start. But before we get any further, man, if you've been liking the content that I'm dropping recently and you're getting a lot out of it, you like the shorts, you like the long form videos, go ahead and hit like, comment on the video, let me know what you think about this stuff, and subscribe, share the videos. Let's grow this channel. I think we can get to this 60,000 mark really quick. With your help, we can eclipse that 60,000 mark and really get these videos trending so we can help so many more people get their get their bag, man. It's really about trying to get everybody to make their money. Also, guys, check this out. We got this new little join button on the YouTube. You've probably noticed it under the YouTube videos. A lot of you really interact with me a lot on YouTube, and you like the the chats, the comment sections and stuff like that, the community. And so what I did was I kind of enhanced that a little bit using what YouTube is now offering us. And so there is a channel access option. You just click join under the video, and you're gonna get like some emojis that nobody else has, stuff that I use all the time. You're gonna get super chat. You're gonna get a lot of cool things like that. Not only that, but I'm giving you some phone, some wallpapers for your phone. I'm giving you the most valuable thing in that little section is we're gonna be having some live sessions and private chats in those live sessions. So when I go live, there's gonna be private chat section, a private chat section just for the YouTube channel club. So. Man, jump on that, click join. It's only $2.99. So join that, and let's keep it moving forward. So guys, let's look at this GBP JPY. We're looking at the 1 hour chart, and I'm going to show you basically how do we scalp, day trade. How do we know if it's, do we trade London? Do we trade the US session? Like what should we really do? And I'm going to show you how you can really kind of most of the time set up to do any of it that you want. It really just depends on how you are going to approach the market. So here's what we're going to do. I'm going to show you what I traded last night or this morning, London, and I'm going to show you exactly how that played out and how some of the team was able to eat not only just on London but also on the US session. So first thing we're going to do is this. It's very simple. Look at the 1 hour chart. Okay, and I just want you to go and mark your most recent high, right? And I want you to go mark your most recent low. Like that's it. First things first. I don't want to look I'm not looking at anything outside of that. Like anything that's previous or above. I'm not even thinking about that, right? Now, the next thing I'm going to do is we know that the market doesn't move in perfect wicks or move. Sometimes it has wicks, sometimes it has odd movement, counter trends, and all kind of stuff. So we don't just trade lines, we trade zones. So all I want you to do is I want you to go to the top, but I also want you to get, what's important is the wick and the body, right? So you get that, and then I want you to do the same thing at the bottom. Get the wick and the body. All right, so now you have a top zone and a bottom zone. So now you know that price is going to generally move from high to low. Now we can talk about supply and demand and how price will come back and grab liquidity in demand zones, grab supply. We could talk about that, but that's another video, and you can see plenty of stuff on my channel about that. Now, here's the next thing though. Once we have that 1 hour zone, what I want to do is I want to drop down to the 30-minute chart. And from there, I want to get the most recent information, because there's one thing about getting a high and a low, you know, a high and low, or a session high and low. But there's another thing about getting the most recent information to find out exactly what price is doing right now. And so what we're going to do is we're going to take the most recent high and the most recent low, and we're not necessarily going to mark them, but I want to drop a fib from the low to the high, right? Just like that, right? And so you'll see, obviously we're already moving, but you can get the information from the previous low to the previous high, most recent, on the 30-minute chart. And what that's going to give you is it's going to give you this area called the golden zone. Most of you who have been around my channel know about the golden zone, because I talk about them a lot. Go ahead and just mark it as a golden zone, and we can get rid of the fib. Okay, so now what does that tell you? It tells you that price is sitting right at the golden zone, trying to, you know, kind of pushing below it just a little bit. No big deal. And it means that what we would generally expect is that price will come, once it moves up, it's going to come down, it's going to test. It's either going to reject the golden zone, or it's going to push through the golden zone back to the low. So now we have eliminated having to look anywhere out here or out here, and even further, we've really narrowed down the price in between these two highs and lows, and we're sitting in the middle. So all we have to do now is find direction and take it to the downside, take it to the upside, whatever price wants to do. All right, so now that we have that golden zone determined, I want to drop down to the 15-minute chart, okay? Because I'm going to find my entry on the 15-minute chart. And so you see how price moved from low to high pretty quickly, but then it's kind of been slow. There's not been a lot of volume. But what's happening is that you'll notice, look at the size of these tiny little candles. And then as we started to switch into here, we started to get some more volume in the market. Now that's not a lot of volume, but it is more than when it was just like Sydney, right? So you have some volume coming in right here. All right. So now, so check this out. The next thing we're going to do is we're going to respond to how the market moves. One of the biggest things that traders can do is just remove bias from their trading. When you start to determine that, you know, I have to take a sell or I have to take a buy, you're setting yourself up for failure, because you're taking away the other side of the market from yourself. What I want you to do is I want you to remove all bias. And so how do we do that? Well, it's very simple. We're going to scroll back just a little bit. We're going to look at the whole picture. The first thing we're going to do is we're going to look from that high that we looked to the second high. So the first high that we got our zone from to the high that we used our fib from, 1, 2, and we're going to go on through. Okay? So that's the first thing. The second thing is we're going to see the inner trend line, because what's happening here is we got from low to high, and then as we have kind of moved down toward that golden zone, obviously it didn't just happen in one candle, right? It didn't just happen in like boom. So we have some structure within that structure. So when we did that on the 30-minute, if we look at the 15-minute here, we have a high, a low, another high, and another low. So what I want to do is I want to get that inner trend line. That inner trend line can be very, very powerful in helping us really to determine what the market is going to do. So let's drag that out a little bit, kind of down to the golden zone. And so now here we are. We have two zones, a golden zone, and two trend lines. That's it. We don't need the chart to look like a Crayola box. We don't need 1,000 markups on the chart. All we need is a couple of simple markups, and then to just let price do what price wants to do. So now let's come back to where we were, kind of bring this in a little bit so you can see it, and that's it. So now we have let me spread it out just slightly. All right, here we go. Just so I just want you guys to be able to see it real good. And so now we just wait. We see that we're literally dead center of the golden zone right now, right where price is. We're dead center of the golden zone. Okay, Now, the next thing we have to remember is that we want price to give us like a real definitive move of direction, okay? So here's what we're gonna do. We're gonna go and let's see what happens next. We're just gonna be patient. Now, mind you, the next thing we have to look at is what time is it, right? Right now it's 1:15. If we're looking at this candle, it's 1:15 a.m. And so London doesn't even open for another hour and 45 minutes. So why would we like try to set a direction before London is even open? Why don't we try to kind of let's see how the market starts to set itself up so that we can use the momentum of London to push our way through. Okay? So let's see what happens next. All right, guys, before we move like forward and actually see what's going to happen next, what I want to show you real quick is if you have not downloaded my free app yet, go and get my app in the App Store, Google Play, and all you got to do is search TGP Forex or Trade and Get Paid Forex. Get the app. It's free. There's some free courses in there. Stay updated with what I got going on and get that free value. And if you're ready to take your trading to the next level and fast track your trading, join the course, join my membership today, tradeandgetpaid.com, become a student, and let's, take your trading to the next level. I believe that we can fast track your success. You can do it for free on YouTube, or you can come into the course, come into the mentorship, and let's fast track it and cut time off of your journey. Let's get you to that success faster. All right, let's get back to these charts. So here's what happens next. Price starts to move around. You start to see these wicks and you start to see the different movement happening. And look at what happens, right? We get a little breakout. But by the time we actually see that this little breakout happens, the next candle drops us right back down. So that's why we always wait for a retest. So now here's what we have. We have a move to the upside and we have indecision in the market. Now anybody knows that when you see these three, most people know, I shouldn't say anybody knows, but most people know that when you see these three candles like this, up, down, up, right? What you're generally seeing is indecision, especially when you have even tops, even bottoms. You're seeing indecision, and the biggest thing that you're seeing is timing. So the next thing that has to happen is we're about to see London open, right? Look what time it is, 2:30. The next 15-minute candle is going to be 2:45. The next 15-minute candle is going to be 3 o'clock London open. So at this point, as I was trading, I was telling myself, I want to see, is there a definitive direction that's set before London's about to open? So let's see what happens next. Now you get this candle. Now I want you to see this. You have that inner trend line. You have direction set. So now the most recent direction is bearish. The most recent direction is bearish, and you have this indecision that happens right here. And then from there, the next thing that happens at 2:45 is you see volume come into the market. You get a nice close below volume candle, and it is in agreement with what the most recent direction of the market has been. So because of that, and that being 2:45, I'm pretty confident now because I got this nice close below that I can get in at the London Open. As soon as this candle closes, I'm in the market. Why? Because I believe that volume from London is being dictated by the volume right here, okay? So we end up getting this nice volume candle. You enter the trade right here, all right? So this is where we enter the trade. In fact, let me make it to where it's very clear. You enter the trade right here, okay? And then you have structure here, and you have structure here for your stop loss. Now, I like this back structure up here because it gives you a little bit more room, and it gives you a better stop loss, to where you're not too tight, right? You could be here, and it's like, yeah, you're saving 6 pips, but you could get stopped out on a fake out, So if you come up here, that's better. And so that's what we did. We entered the market on the next candle. Let me move this over just so you can see a little bit better. and our target was to come down here, right? So now we have really nice movement. Our target is down here, and you know, there you go. So there's your entry. Instantly, as London opens, we just drop, right? Price is looking really good. And for those of you who are scalpers, that was all you needed. Look at that. If you're a scalper, I mean, you did great. In 15 minutes, you caught 20-something pips probably. You probably didn't catch it all the way to the wick. Maybe you did. Or even if you did, it might have pulled back on you some. In 15 minutes, you caught 20-something, almost 30 pips in 15 minutes. That is an amazing scalp. So if you're a scalper, all you had to do is see the volume, let London open, you know, have your trade open for London, and let the momentum of that direction from London carry you on the instant and on the first move. So now you also have structure here that told you that it was going to move down to this area. So if you're a scalper, you're done, right? If you're a scalper, you were probably setting your stop in a little tighter, and you were putting your target at the level of structure here, and boom. If you were a scalper, there you go. You were 1 to 1.6. You were looking good. If you're a day trader, you were coming up here, and you were coming down here. And so you're asking yourself, would I have entered as a day trader at the London Open? Well, no, not really, because if you're a day trader, you really want to wait for a retest. Day traders don't really trade the breakout generally. Day trade, I mean, you can trade it on the breakout, but generally a person who's going to hold a position a little bit longer is going to want to wait for confirmation, not just on a quick breakout. Breakout trading is better for scalpers, and retests are better for day traders. So let's see what happens next. All right, so you see after London, that initial push, look what time it is. Look at the bottom, okay? 3 o'clock, 3:15, 3:30. So you see the market kind of died right after that initial push. The market comes and retests the golden zone and pushes down again. Now, why wouldn't we have entered that trade? Well, because look at the entry candle. It rejected up here, but the next candle didn't even close below or get an engulfing. It wasn't an entry candle. So we would not have wanted to enter on this, right? And so we were good on a scalp right here. That was enough. We're out of the trade. Okay. Now for a day trade, and we're looking for that same similar area entry, but we're looking for that, you know, risk reward and the push to get down here. Okay. So here's what happens. Market moves all the way up here. Now let me move this over so you can see a little bit better. Market comes all the way back up and retests that inner trend line. That inner trend line comes back up into that golden zone area and comes and retests that inner trend line. And so now here's what we're going to do. We're going to start looking for an entry. Well, guess what? There we go. You have a nice entry signal right here. A nice rejection candle. It's yellow. On your screen, it might be red. Shows you right there. There's your rejection. And we would enter the market. And so there we are. Everything's looking good. We're literally in pretty much the same spot that we were on the breakout for the scalp. But now, look what time it is. It's 7 a.m. Now it's time for the U.S. session to start giving us some momentum, right? We're starting to see that London and U.S. crossover. We're about to see that happen, and now we can get momentum from that side of the market. Let's see what happens next. By the time we get down here, it's 10 a.m. Now, guys, it's 3 hours. So that's very, very good timing for a day trade. You got a beautiful entry off of a rejection, and instantly price starts going in your direction, right? Look at that. Look how nice that is. You're talking about 90 pips. Now, here's what's awesome about that. The risk to reward was always there for you. Your take profit was hit within, an hour, about an hour. Your take profit was completely hit, and it also offered you an opportunity to scale out of the trade. As we started to get down here past this structure, right? Look at that, how you can't leave your stop loss sitting way up there and your target here. By that time, we would have already moved our stop loss back down into profit down here, and we would have started to look at scaling our trade. We already probably closed half of our position, and we're looking at letting that run. At that point, I generally remove my take profit. I don't even have a take profit on anymore. I'm manually looking at it, and I'm using a trailing stop, a manual trailing stop. And so I've already secured half the bag. You say, 50% of your trade is out. You leave 50% of your trade in, put your stop loss into profit. And at this point, worst thing that could happen is you get stopped out in profit on a small position. The next thing that happens is as price begins to run like that, or as continues to run like that, well, you're just going to continue to move your stop loss into profit as the market allows, right? So you just continue to do that, and now suddenly you have a risk-free trade, and it just runs. And now, look at this. From the time you open, right at that yellow candle, you get slight 5 pips of pullback, all the way down. Let's not even take it down to the wick. Let's just take it down to this where it started to kind of find indecision. That's 84 pips, right? And so that's how you would trade the day trade for the US session and scalp the London session. And so this stuff happens all the time. This is not like something that just happens one time. All you got to do is just find the volume, ride the volume, right? Find it and then take the volume. There you go. Instant scalp. You're out. Now, if you're a US trader, you're waiting for that same area. You're just doing the same thing, because at some point you're going to get the retest, the breakout and then retest, breakout and then retest. Once you see that retest, you get the entry candle rejection right here. You enter the market on that pin bar, and boom, there you go. Beautiful, beautiful move where you can catch a day trade during the US Open, and that's how we would trade that. So guys, I hope this brought you a lot of value, showing you how to find not just the trade itself, but the timing, right? It's really a lot about timing. And when you can just understand like where you see volume. If I see volume happening at like 10:30 p.m., that's not really a trade that I want to take. Like this happened the other night, right? This happened the other night. I got a nice pin bar here, and it drops down. But that's really not a pin bar because it's not at structure. So you get this nice like rejection candle anyway, like high, low, lower, high, and it pushes down. But I mean, volume coming into the market at 10:30 at night to 11 p.m. at night, that's not a common occurrence. So while you think to yourself, yeah, that would have been a nice trade, it really isn't, because at 11 o'clock at night, you're not expecting there to be volume in the market. And so I've seen so many times where big volume comes in and then it just dies, right? So I'm not really expecting to catch something like that. I'm looking at timing. When I see this stuff happen, and I see these candles happen at 2:45, 2:30, and now I'm like, all right, London is open. Boom. Let's ride the momentum of London. Let's get that crossover between the London and the US session. Boom, rejection candle. There we go. Now we're talking, right? And so that momentum at a certain time of day is really what you're looking for. And very easy to do. Good risk to reward, and very great opportunities to scale out of the trades. All right, guys, there you have it. I hope this video brought you a lot of value, just showing you what we did this morning, London and US session. You can go back and look on the charts and see, you know, this stuff happens at the same time over and over again, especially now that we're passing all the New Year stuff and we're getting back to some level of normalcy in the market. You're going to start to see these times are more and more important as we trade. So if this brought you value, go ahead and like, comment, subscribe, share it with somebody, and let's get this channel over 60,000 subs. And become a student at tradeandgetpaid.com. Download the free app, and let's eat, let's win, let's do this thing together. I'll see you guys in the next video.